All right, let's talk about what the Federal Reserve did on January 28th, 2026. They made a really pivotal decision, one that sent a clear signal about where the U.S. economy is headed. So today, we're going to break down exactly what they did, why they did it, and what this whole hawkish holds thing really means for all of us.
So, heading into this, the big question on everyone's mind was pretty simple. What was the Fed going to do with interest rates? After a whole series of cuts, were they going to keep that trend going, maybe reverse course, or just press pause?
Well, the decision is in, and despite a whole lot of pressure to make a move, the Federal Reserve's committee decided to keep things exactly as they are. That's right. The Federal Open Market Committee, the FOMC, the group that actually calls the shots, voted to leave interest rates unchanged. Now, what makes this such a big deal is that it's a full stop after a long period of easing up. I mean, the Fed had already cut rates 3 times in 2025 and even more back in 2024. So hitting the brakes like this, it marks a real shift in their thinking. And when we say holding steady, what are we actually talking about? Well, here's what it looks like in practice. These are the 5 key policy rates. They're the levers the Fed pulls, from the big one you always hear about, the federal funds rate, all the way down to the discount window. All of these influence how much it costs to borrow money across the entire economy. And as you can see, they're all staying put. But here's the thing. The decision to just hold rates, that's really only half the story. The real news here is the change in tone, the specific words the Fed used. And to really get what they're signaling, you got to read between the lines of their official statement.
So you're hearing this word thrown around a lot, hawkish. What on earth does that even mean? Well, think of it this way. A hawkish stance is all about fighting inflation. It's like a hawk with its eyes locked on its prey. That's the Fed, laser-focused on keeping prices stable, even if it means the economy might not grow quite as fast for a little while. And here it is. This is probably the biggest clue to that hawkish shift. In their last statement, the Fed described economic growth as moderate. This time, they upgraded that single, crucial word to solid. I mean, that one-word change, that signals a huge boost in their confidence about where the economy is. And the shift gets even clearer when you see what they took out of the statement. All that worried language from December about downside risks to employment, gone. The entire phrase they used to justify the rate cuts before, just deleted. The takeaway here is really simple. The language of economic worry has been totally erased. Now, you'd think with a confident statement like this, everyone at the Fed would be on the same page, right? That they'd all be in complete agreement? Well, not exactly. There was actually a little bit of a debate happening behind the scenes. Yeah, the final vote came in at 10-2. So out of the 12 members on the committee with a vote, 2 of them broke from the pack. They voted against holding rates steady. So who were the 2 that broke ranks? Stephen Myron and Christopher Waller. And they didn't just disagree, they wanted to do the complete opposite. They actually voted for another quarter-point rate cut. This just goes to show you there's a real debate happening inside the Fed about which way the economy is really headed. So that begs the question, right? Why did the majority feel so confident? For that, we can just look at what Fed Chair Jerome Powell said himself during his press conference. He laid it all out. Powell was super direct about it. He basically said that all the data they're seeing right now, everything coming in, points to a strong start for the year. The economy is beginning 2026 on what he's calling a solid footing. And get this, he pretty much admitted that the economy's resilience has caught them off guard. And it's not the first time. This right here is the core reason for their hawkish hold. The U.S. economy is just proving to be way stronger, way more durable than they, or frankly, a lot of other people expected. Okay, so let's put all the pieces of this puzzle together. What's the one big thing you should walk away with here? What's the most important message we should be taking from all this? When it comes right down to it, it's this. By holding rates steady and, even more importantly, by changing their language, the Fed is sending a really powerful signal. They are telling the world that they believe the economy is strong and that their fears of a potential slowdown have basically faded away. And that leaves us with a really fascinating question for the future, doesn't it? The Fed's leadership is projecting total confidence. But at the exact same time, you have 2 people on the inside who saw all the same data and came to the complete opposite conclusion. So who's got it right? That's the debate we're all going to be watching unfold.